Right, we're live for another Quick Tip Tuesday, each and every Tuesday, 8 p.m. Eastern Time on Instagram Live. Today's topic is, I'm getting this question for the past couple weeks. Usually with every transaction, you get this questions. What is closing costs? How much are closing costs? What can I expect to pay at the closing table? So this right here can vary for a lot of factors, and you will see why. You won't know exactly how, to the penny, you won't know exactly how much you're going to pay. Of course, you can get an estimate of how much closing may be, but you won't get an exact dollar amount until you're very closer to the closing table. So closing costs is when you purchase a home. Besides down payment, there's also closing costs. So typically average nationwide is about 2 to 6%, depending on the price of the house, the tax on the house, a lot of different factors that come into play as we go along with each bucket list. Number one, in order to originate a loan, the bank, whichever bank you go with, there will be bank fees, application fee, commitment fee. So depending on average, each bank is about the same. Some may charge a couple $100s more, some may waive the fee. So it can vary up and down. Just be mindful. Don't go to a bank just to save $102. Just make sure that they're able to close the deal. They're experienced. They know what they're talking about. They're guiding you the right way. So be careful where you cut corners. There could be credit fees involved and other fees involved when it comes to the bank itself. So another fee will be like a point or discount points. So what does that mean? That means if you want to drop down the rate, you want to get a lower rate. Rates are rising now. It's more typical for people to buy down rates now in order to qualify. So as rates go up, the monthly payment will go up. So some people are buying that down in order to qualify or save on a monthly payment. So for instance, 1 point is 1% of the loan. So if you're buying 1 point down, that can vary, maybe 0.25, 0.4, 0.5% of the bringing down the rate. That's 1% of the loan. Let's say your loan amount is $400,000. That 1 point is $4,000. You can probably save about 70, 60, $80. So depending on if it's worth it, sometimes it's worth it depending on how long you're going to stay in the home. If you're going to recuperate that money, let's say in 6 years, 5 years, to save $50, $60 a month, is it really worth it? Are you going to stay in that home? Are you going to refinance the home within that time frame? So sometimes it doesn't make sense, sometimes it does. So definitely keep that in mind. The next one, we have title fees. So title fees is basically, title does a search on your property, the one you're buying, making sure that you're going to own it with no issues. There's no liens involved. If there's liens, it's going to be cleared, and then you're going to own it with just a new mortgage if you're getting a mortgage. So title is very, very important. You have to pay for a lot of different services for them, and they're going to make sure your name is added on to the deed with the state now. So you're going to be with the city, so you're going to be the new owner. That can vary depending on the price of the house. So title usually now around $3,000-5,000 for an average price home in the nationwide. So that's about that price range. The next one we have is escrow. So what is escrow? An escrow is basically putting money aside to pay for certain things within the house. So for instance, taxes and insurance. Those, you have a set payment which consists of principal, interest, which is basically paying your mortgage back. Aside from that, you have your taxes and insurance. So you pay one flat fee every month. The bank sets aside money for taxes and insurance. Every time those are due, it will take money from escrow and pay that money. If you're short from that money, taxes go up, insurance go up, your escrow goes up. Once your escrow goes up, your monthly payments go up. So at closing, you have to put money aside for that escrow to build that escrow. Reason being is once you close, you typically have close to 2 months of not having a mortgage payment. So you have to have money aside because those may be due in 2 months, month and a half, 3 months. So you have to make sure you're not having a lump sum once you have that mortgage payment. So you have to build an escrow in order to pay for that. Escrow is, let's say you probably put 2 months of escrow. So an estimate, if your insurance is $1,200 a year, about $200 for escrow for insurance. Let's say your taxes are $12,000 a year, about 2 months of that, so that's $2,000 about. Depending on what month you land and when our taxes are due as well. So definitely keep that in mind, how much escrow will be in place. The next would be attorney fees. So attorney was the attorney you select. Average attorney is probably $1,300, $1,500 depending on single family, multi-family home. So that will be impacting our closing costs as well. The next one is mortgage insurance. For FHA, there are 2 mortgage insurance. One at closing and one you pay monthly. So the one at closing, you can pay it in full at closing, or you can add it on to the mortgage, which most borrowers do. It's about 1.75 of the actual loan amount. So let's say a $500,000 home is probably around $5 to $6, maybe a little bit more, $1,000 that will be added to the loan amount. So that can be part of closing costs or can be added to your actual mortgage. If you're buying a condo, there's will be closing costs for HOA transfer fees. If your actual property is in a flood zone, so that's something to keep in mind. You have to get a flood cert, so that can increase your actual closing costs. One thing, this is per diem interest. So depending on the day of the month you close, you would have to pay interest for the rest of the month. So if you're closing on the first of the month, the good thing is you don't have to make a mortgage payment till 2 months, but the per diem interest may be higher because you have to pay interest every day to the end of the month. If you close at the end of the month, the per diem will be lower or non-existent if you close on the last day because there's no more interest at the end of the month. The last one, depending on the loan, will be VA funding fee. If you're getting a VA loan, there's an extra fee you have to pay for closing costs. So just breaking that down, average closing costs, no points, in Jersey, $10,000 to $12,000, depending on, of course, your taxes and other factors, purchase price, but that's an average. Other states may be lower taxes and lower purchase price, so something to keep in mind. So this is the main reasons why your lender won't know the exact dollar amount you're gonna need to closing because all of these variable factors. So keep that in mind. If you have any questions, of course, they can give you a very, very rough estimate on exact numbers. If you have any questions, please let me know. I hope you learned something. And if you want me to discuss something on next week's Quick Tip Tuesday, shoot me a shout. Have a good one, everybody.